Good evening, ladies and gentlemen. It is Thursday, the 17th of November, 2022, and welcome to Hindsight, where we learn to be a better trader. We're going to take a look at three stock tickers today. We've got AAU, BUR, and MTM. All three of these companies are micro-cap junior explorers in the mining space, so I thought it'd be really helpful to bring up this spreadsheet that I made a couple of years ago. I think I posted it in my very first video as well, because I think it's really important for anyone that wants to learn the micro-cap space to get an understanding of what's low, medium, and high grade. Now, do keep in mind, guys, this is a little bit out of date because it is a couple of years old, but for all intents and purposes, you get a pretty good idea of the different grades for different ores using this spreadsheet. So, a question for you guys. What happens when a company hits 100 meters or 200 meters or hell even 250 meters of low-grade copper or low to medium-grade copper? If you've been watching my content at all in the last few months, I bring this up quite a lot. It gets fucking murdered, right? It doesn't matter if it's 20 mil market cap, 50 mil market cap. In fact, the higher the market cap, if it's below 2%, it has a very good track record of just fucking selling off. It just doesn't seem to matter whether it's shallow, whether it's deep, whether it's 1%, 1.5%, or you just got kilometers of 0.5%. It doesn't matter. Anything under 2% just seems to get mauled. Now, what happens when it's above 2%? Well, it performs very well, or it tends to have a gap up and then it spikes for however long it wants to spike and do its price discovery, but it tends to do it to the upside, and then it sort of pulls back a little bit. So, high-grade copper, the market just seems to really love high-grade copper and really reject medium to low-grade copper. For whatever reason. I don't know why, I just follow what the market wants. So this is where we get AAU, which is kind of a mix of both. We'll go into the announcement, and it's this drill hole here. We've got 134 meters, which is a nice thick intercept, at 1.23% copper, which is sort of in that sort of medium to medium low grade, and from 49 meters, which is quite shallow. So right off the bat, to me, this is whatever. It's not great, is how I interpreted this news announcement. However, this part here got my interest. 18.5 meters at 5.5% from 59 meters deep. And then, 5.5 meters, it's not really that great, 5.5. Ideally, you want thick intercepts for high grade stuff, not just like 1 or 2% and, not 1 or 2 meters. And 5 meters is, it's getting there, but it's not quite there. So we really only have this one really good hit followed by a decent hit, an okay hit. So that to me, I was wondering, where's this stock going to go? Because it's only one drill hole, keep in mind. It's not multiple drill holes that I can see. It's got 2 holes out of 6 that it's drilled. And this is the only one that I paid attention to, was this part here. I don't even know if there was anything else. I just read this part on the front page. That's all I cared about. It's the only information I had. So for AAU, the play for me was to match it, to ride it for up to 8 ticks. Now, I'll go back to the daily chart and show you guys in regards to the ticks. ATR is a very big component of what I do for trading. I have a look at the biggest candles there are and find out what the range tends to be. Now, I consider this to be not that significant of a news announcement. So we can see here there's a really high volume day. And it did a pretty reasonable range. And it always seems to gap up and sell off, gap up and sell off, gap up and sell off. And wherever it does rally for a day or two, that might just be a technical break, because based on the volumes, it looks like just a technical break. And if this was news, then it just doesn't hold its value and sells off anyway. So patterns tend to repeat themselves, unless you've got a really extraordinary announcement, which to me, this wasn't an extraordinary announcement whatsoever. This was bottom of the pile stuff. It's, better than your rock chips, of course, but again, market doesn't like less than 2%. It just doesn't. So have a look at the range that this does for the day, and that's my maximum range. Not only that, but I pay attention to how much it wicks to the upside. So have a look at the wicks here. You got 9.2 to 9.8, so that's 6 ticks. You got 9 to 9.6, that's 6 ticks. And I ended up taking this on match, taking it for just a few ticks, and we can see exactly what happens. So that's the previous closing price, 4.3. It was 17 mil market cap, hit a peak of 23 mil market cap on these results. Match, add on, sell out, 5.6 is the bulk, and then scaled out whatever was left. That was it. That was a trade. So that is a combination of understanding copper results. And if you don't believe me, look at my other videos. It's all the fucking same. It's all the fucking same. Low grade copper, garbage. But this had that little piece of information that I really liked, which was this high grade component here. 18 meters in a single drill hole is not enough for me to think this is going to go to 30, 40, 50 mil market cap. It's not enough. One drill hole is not enough. And 18 meters in one drill hole is not enough, even though the grades are really fucking nice. Not interested. Short trade, and then unfortunately there were no shorts. I'm not sure I really would have taken it short, but on this sort of breakdown, perhaps below 5.1 as it sort of came off, and especially below 4.8. I never anticipated a sell-off that goes all the way to 3.5. That seems like a very big overreaction. Going below the day before, going below its closing price seemed a little bit excessive. But whatever, like the market just, for whatever reason, really doesn't like copper results that are low grade. So, or low to medium. So that was unexpected, and of course there were no shorts, so I couldn't take the short. But you guys can probably see the amount of information being taken on just to make this one trade. So we also go to BUR. These guys had a acquisition of some Canadian and Gascoigne lithium projects. Now lithium's hot. Even rock chips fucking rally, right? So I had to at least pay attention to this one. Now these grades are whatever, medium, intercepts are whatever. Yeah, 11 meters, 9 meters, 6 meters. Like, great, they got multiple hits in multiple holes. That's always good. And these are relatively shallow. Anything under 100 meters tends to be okay, I guess. Is just to put it simply. You know, once you start hitting 150 meters, it's a little bit too deep, and anything, you know, after 150 meters tends to get pretty uneconomical for a lot of things. So the depth-wise isn't that bad. But the intercepts are like, you know, whatever, 12 meters, 11 meters. It's okay. You definitely don't want to do, or at least I definitely don't like single digits. I just don't. In terms of intercept thickness. So this was interesting in that it was just lithium. It was low market cap. I think it was 15 mil. It doesn't show the market cap here, but I think it was 15 mil and it opened up quite strong. Now, the reason I didn't take this one on match is because the order book was trash. It opened up, I think there was like 1 or 2 orders. There was like I think there was a 10-cent spread on this one. And it kind of just, you know, the sell side kept thickening up, and then eventually it just kind of tanked. And this is the 5-minute chart, mind you, as well. So it kind of sunk, and then it started bouncing here. And this was my sort of, oh, here we go. This could be interesting. Because I was looking at this and I was going, well, BUR's on my radar, but I tweeted it out. It's on my radar, but you know, not while it's going down. I'm going to look for a buy the dip opportunity. And there it was. Once this candle was there, I was anticipating a break of 32. So 32 was the entry. I think I got 33.5 or 33. And pretty much it came up, pulled back to VWAP, did nothing for a little while, and basically broke even for the trade. So it would have been nice to, you know, close at 36, 37, something like that. But you know, I was anticipating a bigger trade to the upside, bigger move to the upside, based on the fact that it was lithium. But in this case, it was just really, I caught the right side of the V. And this is a term that Lance Breitstein, sorry, I don't know how to pronounce his name, but I've always had this concept of when a stock's going down, it's not worth entering, right? But if a stock is going up, then it's worth entering, even if you get it the exact same price. So this is the concept of getting the right side of the V. So I'll bring up this this tweet by Lance, and I only just recently found this. I think it was like earlier this year, and I thought it was a really, really, really cool concept just in a simple image, right? It explains so much about trading in a simple image. This is the EV at A versus the EV at B, and even though they're the same share price, they yield different EV. And EV, I know you guys might hear that and think it's enterprise value, which is normally what we hear when we talk about the ASX stocks, is the EV, negative EV, positive EV. But in this case, I imagine that EV stands for expected value, or like expectancy, basically. So expected outcomes is sort of how I interpret that. In terms of trading, that's exactly what this was. There's no point me buying 32 on the way down, especially when it broke the previous closing price. Oh, that was the opening price. So it broke the opening price, has gone down. I'm not going to buy it at 31, 30, 28. You know, anyone that sort of buys the dip, I think, is a bit of a sucker, because there's no confirmation. There's nothing. There's no targets. It's just a waterfall to the downside. So for me, I don't want to buy the dip there because there's no levels to buy. Where am I going to get? I probably would have taken 24. I mean, that would have been a sick entry, right? Getting to 24 and then having a bit of a bounce. Because it is lithium. So I'm expecting and I'm anticipating a bounce on this purely based on that it's lithium. And the market cap was quite low as well, sitting around somewhere around the 15 mil market cap space for an acquisition, which is probably roughly where it should be for an acquisition. Depends in where that acquisition is. I'm not too familiar with Canadian lithium, but yeah, if it was somewhere like the Salta province, then that's a completely different story. So we have MTM as well. Now for MTM, you probably saw my previous videos on TREO, and I think maybe like 3 videos ago, maybe 4. You'll notice rare earths are a trend, TREOs. So what we have here is, again, 8 meters, 6 meters, 3 meters, 2 meters, and 1 meter, right? Single digits, not really interested. So it's not that great. However, trios have been rallying pretty hard. I think it's WA1 that had their trios, although that was largely the niobium grades. But anything that sits at 1500 parts per million or over tends to get market attention. Doesn't mean it's good or great or economical or anything like that. It's just a pattern that the market tends to find interest and provide liquidity for stocks that have 1500 parts per million of trio, especially when it's sub 15 mil market cap. So what we have is very thin intercepts. This would have been nice if it was like 40, 50 meters or something like that. Just nice thick hits to really push it to somewhere closer to 20 mil, 22, maybe 25 mil market cap. But in terms of peer comparisons, all of this is nice, but the intercept is not. The intercept is quite thin. But it was still 3 mil market cap, which is crazy low, right? It had super low shares on issue, and it had 3 mil market cap. Now, 3 mil market cap for something that has even 8 meters of trios, it's fine. In my books, it's fine. I called this a 15 to 20 mil market cap target when I traded it. So going from 3 mil to 15, it's pretty reasonable, I think. So I could be wrong about that. Was it 3 mil? Was it 3 mil? I think it was 3.7. Anyway, so we got this stock opening up, and this was very similar to BUR in terms of its order book. There was only like 1 or 2 sellers on the sell side once it matched. The difference was the market cap was so low, and TREOs and rare earths generally are just so in demand at the moment. They're so hot, just like lithium, that for me matching it was not a problem. I felt very little risk in terms of buying it as well for that reason. Really low market cap, and the fact that it was TREOs, which is a hot sector. You know, if this was gold or something like that, yeah, I wouldn't touch it with a 10-foot pole. I'm just not interested. So we have a push to the upside. We have the first initial sell, and this doesn't have Chi-X data, so I want to point out that this volume was probably a little bit more like that in terms of how high it went. But it had more volume. Off the top of my head, it had more volume than the opening candle. And doing that during the price discovery in the opening 15 minutes, you know, a stock has to top out somewhere, but I don't like seeing it top out with significant volume. Someone just marketed here at 16 and a half, somewhere around there, and it just really killed the price action. It really spooked people. So I was waiting for a pullback. I was actually looking for somewhere around a double bottom to defend it as well, but I didn't need to. It sort of just dawdled around 13 and a half. I think a few dollars went through. You can see what happened to the volumes after that big seller. And it's like, okay, that's fine. There's no reason for me to bail out from my good entry at match. There's going to be a pullback, right? All stocks rally and pull back. That's just normal, right? A stock's not going to just keep going up. It's going to go up, and I'm not going to try and pick the top on the first move, because that who knows where that is. So I got the first move. We got the first move. It tops out. Great. Find the next position to add on. And for me, it's a double bottom if I really like the stock. And, you know, if it doesn't launch too far out, and I think from 12.5 to 16.5, it might have moved a little bit too much to double bottom, but I was still waiting for it to come down anyway to get just an add-on to my position. And it didn't. Kind of just dawdled, swung back up slowly, and there was no real opportunity for me to add on, so I kind of left it as what I had for my initial position. And then there was a struggle here at 17 after it broke this horizontal. So we have the opening range. You guys know I love my opening ranges. Right, there's the opening range defined very early on in the trade. So it peaks, pulls back, no room to enter anywhere here because it's just an arbitrary pullback. And there was nothing on the book to really suggest a good entry level as well, so wait for it to go back up. And the important price action is here for me. So once it breaks into new highs, again, this is the one thing I mentioned in Discord that was really important, is the 16.5 level. Is that seller still there? I think he still had 250k here on the offer. I wasn't watching that closely, but I'm pretty sure he got eaten up and then he just started reloading again. So even though the price pushed up to 17, the sell pressure was still very heavy, and then it was just a matter of getting the fuck out. Just identifying the price action was not good. And then the second time there's high volume selling, that's it. For me, kaput, done, gone. Now I also found out midway through the trade as I was holding it, someone mentioned that there was a rights issue, so I looked that up. I believe it was a 10-cent rights issue. So effectively, you're going to have people bailing in droves because they're just going to get shares for cheap anyway. So that's what happened there. It's no surprise that I guess if I had that knowledge ahead of time, I probably wouldn't have had a 20 to 22 cent target. But this hit perfectly in my my target of 16 to 20 cent range. Sorry, I might have missaid the market cap target. I think I said 15 to 20. It's 10 to 15 mil market cap target was what I had in mind. So 10 to 15 mil market cap, it got there quite nicely. At least at the bottom end of that range. It didn't quite hit the top end, which is unfortunate, but it is what it is. Using peer comparisons to hit this target. And keep in mind, when I say target, it's peak target, right? This isn't fair valuation. This isn't like me going, oh, you know what, this stock should just chill out and sit somewhere between 10 to 15 mil. No. These are peak targets. This is where it rallies to on news. These are the targets that it tends to peak out at, and then it pulls back, and then it just sits wherever. I don't even know where these stocks go. Once they hit their peak, they can just sink. I have no idea. I don't keep track because I'm not an investor. I'm not interested in that. So I find out where a stock peaks and take profit, and that's that. So guys, I hope you found this content useful. If you did, please give us a thumbs up. Otherwise, if you haven't subscribed already, please do so, and I'll catch you in the next video. Cheers, guys.